I'm Dan Fitzpatrick, stockmarketmentor.com, and it is Tuesday, Apple Tuesday, January 26th. Look, today, another 3 stocks I saw on TV. Interesting week, and so today I want to look at Apple, Weight Watchers, and Lockheed Martin. First, everybody's been waiting for Apple to release their earnings, and if you're haven't heard what happened, you may be looking at this chart saying like, okay, well, why are you doing this before they report their earnings, Dan? Well, I'm doing this after they've reported their earnings. I want to look at the 1-minute chart. Okay, the first move is always the wrong one. I mean, seriously, here we get a little sell-off into it, but this was just somebody making a bet, frankly, not that much trading going on. And then a big rebound to the upside because, they beat their earnings. Well, I shouldn't say nobody, but a lot of people don't particularly care about earnings. What they really want to see is revenues, because a company can massage their earnings, write certain things off, push things back, pull things forward, that type, fire people, that type thing. There's a lot of different ways that you can massage your earnings around to beat the number. But what's most important is, what are your sales? Are you bringing in money? Forget for a moment about how much you're keeping. Of course that matters. But are you bringing in money? Because if you're not growing your sales, sooner or later you're going to have big problems. And so that's, in my view, why Apple's kind of trading sideways to down. Look, they beat in earnings. I think it's going to take people a while to figure out that earnings aren't really as important as sales, and I think there's still a lot of Appleonians out there who just think that Apple's the greatest damn thing since sliced bread, and that's why it's just basically trading sideways. But the thing that was most meaningful to me, though, to be honest, I'm not really even sure which way this thing cuts. They had a 14% jump in China on their first quarter revenue versus last year. So China's the big dog, right? I don't really, frankly, know whether 14% revenue growth is that big a deal. Not when China is where the future supposedly lies. So look, here's my sense. This is a triple top here. This is like just some kind of deformed head and shoulder pattern. You can draw the head any way you want. I'll say here's a shoulder, and look at that. Nice little head. This is a new pattern that I'm just inventing. And this is the right shoulder. You draw the line. Forget about this. Everything fell that day. Just draw a line right through here. It's at 105, right? So we got 135 on the upside. That's 30 points from 105. You break this thing down. 105 minus 30 points gives you what? 75, right? Did I do my math right? I think I did. Ultimately, and seriously, I could see Apple going down there. And the only reason that it wouldn't is because if they have more than $75 of cash per share, and I don't know what that number is, but I'm telling you, this is a stock that if there's no real reason to buy it, and investors aren't finding a reason to buy it in the after hours. If there's no reason to buy it, then you're going to find money going elsewhere. And that's about as far from the tree as the apple's going to fall. I don't even know what that meant. Weight Watchers. Turns out Oprah's lost like 28 pounds or something like that since she basically since she did a deal with Weight Watchers to lose weight, and that jumped the stock way up here. So here's the thing. I think this is important. I mean, look, Oprah's like a yo-yo. She's going to gain that weight back. She always does. Do you know why? Because she's a person, and that's what happens with people with weight issues, and I'm one of them. You lose it, you gain it, you lose it, you gain it. But what's important here is the stock fell back to $11, 200-day moving average, right at the top of this gap, and it did not fill the gap. So this is a stock, frankly, that I think you can buy. It's going to be a high maintenance stock. It'll be a high maintenance stock. because, I mean, look at the rip today. I mean, this was a big move in a big way. But I think, frankly, there's probably a bit more upside in it. And then finally, we'll look at Lockheed Martin. Now, they reported earnings. Investors didn't really like it much because the stock fell. What was it, like almost 5% here? They also reported that they're separating their government IT department and going to form it with another company. I forget the name of the company, and it doesn't matter, and you don't care unless you work for Lockheed Martin, in which case you already know the name of the company. But the reason I wanted to show you this was this stock came down to $200 and held. This was a great, what we call at Stock Market Mentor, a 59-minute trade, where you trade basically you trade the move during the first hour of trading, or the first 59 minutes of trading, or a fraction thereof. And this was a great opportunity to do that on a downside dislocation. You'd see the first minute the stock hit the low. So I think Lockheed Martin, frankly, the fact that it's just barely down a little bit from where it was yesterday, I think the support level here at the 200-day moving average is holding. This is not a momentum stock, but it's an aerospace company with a 3% dividend that should probably have a place in your portfolio. And by the way, if you have not checked out Stock Market Mentor, please do so. Also, if you're interested in kind of bumping up your day trading skills, check out the 59-minute trader at Stock Market Mentor, because you'll find I keep asking Gary, my brother. He keeps telling me we have not had one bit of negative feedback on the 59-minute trader. Basically, if you're doing what I'm telling you to do, you can't help but make money. I promise you that. Okay, I'll see you next time.